If you own Bitcoin in the United States, you have tax obligations whether or not anyone has told you about them. And as of 2026, the IRS knows significantly more about your Bitcoin activity than most holders realize. Every centralized exchange operating in the U.S. is now required to report your capital gains and losses directly to the IRS, using a new form called the 1099-DA. That does not mean every Bitcoin transaction is automatically calculated for you. It means the reporting landscape has changed significantly, and the era of cryptocurrency as a tax reporting gray area is over. This video is not tax advice. I am not a tax professional, and nothing here should replace guidance from a qualified accountant or tax advisor who knows your specific situation. What this is an honest overview of the framework you need to understand before you speak to one. I'm Sats, and today we're making Bitcoin tax in the US actually makes sense. Let's keep it simple. The foundation, how the IRS treats Bitcoin. The IRS classifies Bitcoin as property, not currency. This distinction matters because it means that almost every interaction with Bitcoin can be a taxable event, not just selling it for dollars. What is a taxable event? Selling Bitcoin for US dollars, trading Bitcoin for another cryptocurrency, spending Bitcoin to buy goods or services, receiving Bitcoin as payment for work, mining Bitcoin, receiving Bitcoin as a gift above certain thresholds. What is not a taxable event? Buying Bitcoin with dollars and holding it, transferring Bitcoin between wallets you own, receiving Bitcoin as a gift below the annual gift tax exclusion. The key word is disposal. When you dispose of Bitcoin, you have a taxable event. When you simply hold it, you do not. Short-term versus long-term capital gains. The tax rate on your Bitcoin gain depends on how long you held it before you sold or disposed of it. If you held the Bitcoin for 1 year or less and then sold it, the gain is a short-term capital gain. It is taxed as ordinary income at your regular income tax rate, which ranges from 10 to 37%, depending on your total income. If you held the Bitcoin for more than 1 year before selling, the gain is a long-term capital gain. Long-term capital gains are taxed at preferential rates, 0%, 15%, or 20%, depending on your taxable income. High earners may also pay an additional 3.8% net investment income tax on top of the long-term rate. The practical implication is significant. The difference between selling Bitcoin after 11 months and selling it after 13 months can be a meaningful difference in the tax rate you pay. Holding for more than a year is one of the simplest and most effective forms of legal tax planning available to Bitcoin holders. Cost basis, the number that determines your gain or loss. Your taxable gain is not the full amount you receive when you sell. It is the difference between what you sold it for and what you paid for it, your cost basis. Cost basis equals the price you paid for the Bitcoin plus any fees associated with purchasing it. If you bought one Bitcoin at $40,000 and paid a $50 fee, your cost basis is $40,050. If you later sell that Bitcoin for $60,000, your taxable gain is $19,950, not $60,000. If you have bought Bitcoin multiple times at different prices, calculating your cost basis requires identifying which specific Bitcoin you are selling. The IRS allows several cost basis methods, including first in, first out, last in, first out, and specific identification. Specific identification, where you choose which specific purchase you are selling, often results in the most favorable tax outcome when done carefully. However, it requires meticulous record keeping. This is why records matter. Every purchase, every sale, every fee, every date. If you do not have these records, calculating your accurate cost basis is difficult, and the IRS may default to a less favorable method. Capital losses. The silver lining. If you sell Bitcoin for less than you paid, you have a capital loss. Capital losses can offset capital gains, reducing the amount of gain you are taxed on. If your losses exceed your gains, up to $3,000 of excess loss can be used to offset ordinary income in a given year. Any remaining losses can be carried forward to future tax years. There is also an important rule that does not apply to Bitcoin but does apply to stocks. The wash sale rule prevents you from claiming a loss on a stock if you buy a substantially identical security within 30 days before or after the sale. As of 2026, this rule does not apply to Bitcoin and other cryptocurrencies, which are classified as property rather than securities. This means you can sell Bitcoin at a loss to capture the tax deduction and immediately rebuy at the same price. This may change if Congress extends wash sale rules to crypto, so check the current rules before doing this. Bitcoin received as income. If you receive Bitcoin as payment for work, as mining rewards or as staking rewards, it is taxed as ordinary income at the fair market value on the day you receive it. This creates a cost basis for future capital gains purposes. If you later sell that Bitcoin, you pay capital gains tax only on the appreciation above the value you already paid income tax on. This is why the tax on Bitcoin compensation can feel like double taxation. You pay income tax when you receive it, and then capital gains tax when you sell it if the price has risen. But you only pay capital gains tax on the additional appreciation, not the full sale price. Reporting your Bitcoin taxes. You report capital gains and losses from Bitcoin on Form 8949, and then summarize them on Schedule D of your Form 1040. If you received Bitcoin as income, it is reported on Schedule 1 or Schedule C, depending on whether it was self-employment income. From 2026, your U.S. exchange will send you a Form 1099-DA showing the proceeds from your sales. This form goes to you and to the IRS. Ensure your own records match the 1099-DA before filing. Discrepancies can trigger IRS attention. Crypto tax software such as Coinly, CoinLedger, or TaxBit can help you calculate gains and losses across multiple transactions and generate the necessary forms. For anything beyond a handful of transactions, these tools are worth the cost. The most important practical advice. Keep records from day one, every purchase date, purchase price, fee paid, sale date, and sale price. If you use multiple exchanges or wallets, this can become complex quickly. The sooner you start keeping records, the easier tax time will be. If your Bitcoin activity is significant, work with a tax professional who has experience with digital assets. The rules are specific, they interact with your broader tax situation in ways that are not always intuitive, and the cost of good advice is almost always less than the cost of getting it wrong. Nothing in this video constitutes tax advice, and your situation will differ from any general description. What this video gives you is the vocabulary and the framework to have an informed conversation with a professional who can advise you properly. Here's the short version. The IRS treats Bitcoin as property. Disposal events, including sales, trades, and spending, create taxable events. Holding does not. Short-term gains held 1 year or less are taxed at ordinary income rates of 10 to 37%. Long-term gains held more than 1 year are taxed at preferential rates of 0, 15, or 20%. Your taxable gain is the sale price minus your cost basis. Keep records of every purchase price and fee. Capital losses can offset capital gains in up to $3,000 of ordinary income per year. The wash sale rule does not currently apply to Bitcoin. Bitcoin received as payment or mining income is taxed as ordinary income when received. It creates a cost basis for future capital gains purposes. Report on Form 8949 and Schedule D. From 2026, your exchange will send a 1099-DA to you and the IRS. Work with a qualified tax professional for anything beyond the basics. The framework here gives you the vocabulary. The professional gives you the advice. If you want to understand what actually happens when you sell Bitcoin for the first time and the practical surprises that come with it, the video on selling Bitcoin for the first time covers that experience honestly. Watch that next. Stack smart, stay curious, see you in the next stack.